Hello and a warm welcome. You've joined us on Market Cafe today morning. I'm Ashesha Advaryu. With me is Kanishka Sarkar joining us from our Delhi studio. And big announcement coming in yet again today, where US President Donald Trump yesterday said that he will be levying additional 25% tariff on India, totaling to about 50% now. We'll try and decode that. The sector is likely to be impacted in greater detail. But Kanishka, let's get started.
Absolutely, Ashisha. Very good morning to you, and let's get to the top story first of all. Now, India's Russian oil purchases have landed it in Donald Trump's firing line. Now, despite the fact that Russian crude isn't under sanctions, the US president has slammed India for fueling Putin's war machine, slapping an additional 25% tariff on Indian goods, hiking the total duties to 50% now. And Trump says that more countries could face similar scrutiny. In an executive order, he has accused India of directly or indirectly buying Russian oil and directed his team to investigate other nations doing the same. Now, India did hit back, calling the tariffs unfair, unjustified and unreasonable, stressing its crude purchases are driven by market forces, not geopolitics, and are vital for the energy security of its citizens.
As you know, we put a 50% tariff on India. On oil, they're the second largest. They're very close to China in terms of the purchase of oil from Russia. But so I don't know if that had anything to do with it. But we've had very productive talks today. Yes, ma'am.
If you do reach a deal with Ukraine and Russia, would you drop the additional tariffs on India?
Well, we'll determine that later. But right now they're paying a 50% tariff. It's only been 8 hours. So let's see what happens over the next. Yeah, you're going to see a lot more.
So this is a taste of.
You're going to see a lot more. You're going to see so much secondary sanctions. Yes, ma'am.
Keeping that 10 to 12-day deadline that you had given Russia after today's talks?
Yeah, we're pretty much getting close to it right now. But we're having very serious talks right now about getting out of Ukraine, getting it settled, getting it ended. Should have never started, would have never started. If I were president, it would have never started.
All right, so that's the latest word coming from Donald Trump. But moving on, my colleague Sumita Karish has been tracking the tariff story since day one, and she's now joining us with more perspective in India's response and what it means for trade ties between US and India.
That's right. The White House has announced that it's imposing an additional 25% tariff on India, bringing the total levies against the major United States trading partner to 50%. President Donald Trump said in an executive order, and I quote, that I find the government of India is currently or directly or indirectly importing Russian oil federation. Well, India once again has hid out and it has reacted. The MEA has in a statement stated that the United States has in recent days targeted India's oil imports from Russia. We have already made our position clear on these issues, including the fact that our imports are based on market factors and are done with the overall objective of ensuring energy security of 1.4 billion people of India. It also states that it is extremely unfortunate that the United States should choose to impose additional tariffs on India for actions that several other countries are also taking in their own national interest. The statement states that India reiterates that these actions are unfair, unjustified and unreasonable, and India will take all necessary actions to protect its national interest. In fact, it now remains to be seen what steps the government of India is going to take to protect its domestic industry and what happens to the talks that were slated to happen on August the 25th. When a team from the United States is expected to come for negotiations. But definitely this tariff story has assumed a geopolitical dimension as well. So, of course, these talks are going to be complex. And whether a deal is arrived at by the fall of this year, that remains to be seen.
All right, so all eyes on what comes out of, the US delegation, which is expected to come in to India on August 25th and take the talks forward from there. But moving on, now, while both sides, they continue to trade barbs and point fingers at each other for depending on Russian resources, let's understand how much Russia's discounted oil even matters in the context of India's fiscal balance sheet. If India stops buying Russian oil, will it be a big hit to the economy? Now, Ashesha is here with all the details and the math of it all.
Well, yes, let's understand the math and the impact India could have if at all India were to not buy oil from Russia. Now remember, total import of oil from countries excluding Russia stands at about 1.8 million barrels per day. This multiplied by 365 translates to about 660 million barrels. That's the annual purchase of oil India does from countries excluding Russia. Now remember, currently Russia supplies oil at a discount to India at about $6 to $8 per barrel. This multiplied by 660 million barrels per annum translates to about $4 to $6 billion. So that's the amount India will have to pay additionally if India does not buy from Russia and instead buys from other countries globally like Iran, Iraq and Saudi Arabia and several OPEC plus countries. Now remember, it is also important to note that Brent crude prices over the last 3 years have declined substantially. So in calendar year 2023, Brent crude prices averaged at about $82.2. This declined to $79.8 in calendar year 2024. In the current year, so far, oil prices have averaged at about $70.6. In fact, now they've fallen even lower to nearly $68, $69 per barrel mark. So oil prices steadily have declined over the last 3 years. So the impact of, if at all we were to not buy from Russia, is likely to be very minimal. Additional cost will be $4 to $6 billion. But on the flip side, we've seen oil prices decline. So the net impact on India's trade balance and foreign exchange reserves is likely to be very minimal if we were to not buy from Russia. On the flip side, though, if you don't buy from Russia, several other sectors are likely to be impacted. But remember, rising OPEC plus supply will also ensure that prices fall in the global market because of supply glut, and global slowdown also could push prices lower, which will again be a positive for India because remember, India imports nearly 85% of its crude oil requirements. On the flip side, though, Russia is a big player in the global oil market. So if supply from Russia in the global oil market falls, perhaps we could see some kind of upward pressure on oil prices. That again could be a negative for Indian buyers and Indian oil marketing companies. But yes, if we stop buying from Russia, we will have to pay additional $4 to $6 billion per annum. But if we buy from Russia, a whole host of sectors are likely to be negatively impacted. The likes of shrimp sector, organic chemicals, textile, apparel, gems and jewelry, machinery and mechanical appliances. So that's the math, and we have to figure what works best for India now.
All right. Thank you, Ashisha, for taking us through that detailed analysis. But let's get tracking some key commentary as well then. First up, let's take a look at what Prime Minister Narendra Modi said. He was at Kartavya Path yesterday where he spoke about the Indian economy. Let's take a look at his comments.
हमें मिलकर भारत को दुनिया की तीसरी सबसे बड़ी इकोनॉमी बनाना है। हमें मिलकर मेक इन इंडिया और आत्मनिर्भर भारत की सक्सेस स्टोरी लिखनी है। हमारा संकल्प होना चाहिए, हम अपनी और देश की प्रोडक्टिविटी को स्केल अप करेंगे।
All right, so not 15% or 25%, a total of 50% tariff is what Trump intends to impose on Indian goods. But what's fueling this move? Experts say it's less about sanctions, more about leverage. Now, the White House once asked India to buy Russian oil to keep prices in check. Now it's accusing Delhi of doing exactly that. Now, what does this mean for ties between the two nations? Let's listen into the expert commentary.
The truth is that if we really stop buying Russian oil altogether, and if we then buy it only from the Gulf and other sources, the price of crude oil will exceed $100 a barrel in no time. In other words, there will be a 50% increase in the price of oil if you don't buy Russian oil. I mean, I don't think they will be able to sell it to other people so easily and so smoothly as we have been doing. So this is a separate issue from the reciprocal tariffs issue. And on this, I think we should be very firm that the way the sanctions were put were unacceptable to us. We therefore found another way around of buying this Russian oil by various other means. But at this point of time, it is inescapable, and we are going to stand firm because there is no question our 100% giving up on Russian oil, the blow to us would be bad, and the blow to the rest of the world, including the United States, where also prices will go up.
All right, so those are the latest comments that we are tracking from Swaminathan Iyer. But moving on, my colleague Srishti is standing by with all the latest commentary that's coming from India Inc. about Trump's latest tariffs. Srishti, over to you. What are Indian corporates making of these tariffs?
Well, yes, a whole host of India Inc. Has reacted to the double the tariffs on India, wherein first up, let's tell you the comments coming in from Anand Mahindra, chairman of Mahindra Group, where he's saying that the law of unintended consequences seems to be operating stealthily in the prevailing tariff wall unleashed by the US. Now, India must go beyond incremental reform and create a genuinely effective single window clearance system for all the investment proposals. While states control many investments regulations, we can begin with a coalition of willing states aligning with the national single window platform, and if we demonstrate speed, simplicity and predictability, we can make India an irresistible destination for global capital in a world seeing trusted worthy partners and unleash the power of tourism as a forex engine. We cannot fault others for putting their nations first, but we should move to make our own nation greater than ever. Other than that, we also have comments coming in from Harsh Goenka, who is the chairman of RPG Enterprises, where he's saying that you can tariff our exports but not our sovereignty. Now, he raises our tariffs, we will raise our resolve, find better alternatives and build self-reliance. India boasts to none. Other than that, we also have comments coming in from Sabir Bhatia, who is the founder of Hotmail, where he's saying that the Trump just raised the tariffs on Indian goods to 50%. India should seize the moment and slash the tariffs on the US to 0%. Yes, zero. It would be the boldest move for the Indian economy, driving competition, innovation and growth, and time to think smart, not react small. And lastly, we have the comments coming in from Anand Ranganathan, who is a scientist and author, and he's saying that so Donald Trump has imposed 25% additional tariffs on India as punishment for importing Russian oil. No such tariff on Europe, that is importing 8 million tons of Russian oil, or China, that is importing 108 million tons of Russian oil. We stand alone, but we stand united. So these are the big comments that we are tracking from India Inc. this morning.
Thanks so much for joining us with all those details, and to understand how the world is reacting to this, we are now joined by an expert. Mr. Rajiv Vagaral of Doordarshi India Fund is now joining us. Mr. Agarwal, thank you so much for taking your time out and joining us today morning. Tell us, what were your first reaction to the additional 25% levy that has been done on India for India's purchase of Russian crude oil? How is the world reacting to this?
I think, good morning first. I think this has been building for a little while, where Mr. Trump has been giving a lot of indications that there will be additional levies. It was just not clear what it will be. And I think what this means effectively is that Trump is not just bargaining for the trade, but also in terms of how the whole establishment is, the geopolitics is around who's buying what. I think it is still early days. As we all know, Trump is really negotiating. And so one has to realize that these are not the final decisions. These are the first gambit. And I hear a lot of commentary from many people where they are either taking an extreme stance one way or the other. I personally think this is an opportunity for good negotiations at the very top level and try to sort out this matter, because ultimately India and US are natural partners in terms of how the system works. So I think we are capitalistic, we have democracy, and there are a lot of things that we can work together on. And these trade barriers and stuff like that should not prevent the long-term future that we can have together.
Okay. Hi, Rajiv. This is Kanishka also joining in. Like you were saying, it could actually serve as an opportunity. I wanted to understand, what do you make of the timing of this latest announcement of the 50% tariff? You know, NSA Ajit Doval, he is in Russia at this point, and this is when Trump's comments are coming, and on August 25th we'll have the US delegation come to India to discuss this matter further, and these tariffs take effect only on August 27th. So what do you make of this entire timeline? What does this say about the ties going ahead between the two countries?
I think that's a very important point you raised, which is there are 21 days from now when the tariffs take effect. And there is a lot of good possibilities between now and then. We have the trade delegation coming from the US, but obviously India and US have been constantly talking through the back channel. And I think the fact that we will have India's Prime Minister go to, for the Shanghai Cooperation SCO meeting also means that India has some leverage, because you are talking to one of the key competitors of US, which is China in China. And I think that gives some flexibility, but clearly the idea here is make the two countries should move forward in a manner that is win-win for both. And so I think that the timing to me tells me that there is room for negotiation.
There's still more room for negotiation. That's the word coming in. Mr. Vagaral, thank you so much for taking your time out and joining us today morning and helping us decode what the 50% tariff really means for India and how is the world reacting to that. Thanks so much for joining us today. On that note, we need to slip into a very short break, but our coverage on tariff will continue on the other side.
When the stakes are high and the answers.
Today, let's shift focus to some global cues then. Now let's take stock of how the Wall Street fared overnight. Now US stocks, they came off a very positive session yesterday. The S&P 500 that ended about 0.7% higher, while the Nasdaq Composite that advanced more than 1%. The 30-stock Dow Jones industrial average that gained about 81 points or 0.2%. Now these moves, remember, come as Trump has imposed an additional 25% tariff on India, bringing the total US levies on India to 50%. He says the hike is because India continues to buy Russian oil. Now, apart from this, he's also said there would be a 100% tariff on imported chips, but not for companies that are building in the United States. So the street continues to monitor tariff-related developments and quarterly financial results as well. Now, week to date, the S&P 500 has gained about 1.7%, and the Nasdaq has added about 2.5%. The Dow, that has advanced almost 1.5% as well. Now, today, the street will watch for weekly jobless claims data, as well as releases on unit labor costs and productivity for the second quarter. On the earnings front, they will look at reports from Eli Lilly and Warner Bros. So that's how the U.S. market setup is looking. But Ashesha, how are things on the crude front?
Well, yes, despite the kind of announcement that came in from Trump yesterday, where he will be announcing additional 25% tariff because of India's purchase of Russia, we are not seeing any major impact in the crude oil market similar to what we saw last time. So Brent crude is up marginally by about 0.4%. In fact, yesterday it ended in the red and it is currently trading near that $67.15 per barrel mark. So market clearly is unnerved and unbothered with the kind of announcement Donald Trump made yesterday. And now remember, after 3 consecutive months of gains that we saw over the last 3 months, Brent crude this month so far has declined nearly 3.5 to 4%. But today, of course, despite the announcement, we are not seeing any kind of major impact in the global oil market.
The global crude market setup is looking like. But moving on, let's also take stock of all the market cues for the Indian market. And our research head at ET Now and ET Now Swadesh, Abhishek Gaushande, is now joining us. Abhishek, what is your initial reading of this additional 25% tariff that Trump has imposed on India? What are you making of this?
So first of all, it should be considered as that the concern comes true that previously that when Trump has introduced this 25% duty, he has also indicated for an additional penalty on India if it will continue to buy oil from the Russia. First of all, if you can go by mathematics, then the things will be more clear to us. This Indian export to US constitute roughly 2 to 3% to the total GDP. So in worst case, the maximum impact of all these things would be one can say 20 to 30 bits kind of a thing. And out of that, if you can say that last year, I think the total deal size was roughly $130 billion, and out of that 87 billion was the export. Out of this export, 30% of the export comes under the exemption list. So this additional duty or the 50% duty, whichever we can account now, will be applicable on the 70% of the export value from India to US. So larger part of the things will itself get out of the list. Say for example, pharma or electronics will not be part of this list. Third thing is that even though this has been announced that additional 25% duty will be imposed, but there is a window, there is still a window for 21 days. So one can expect that during this period some kind of a negotiations may happen, and these things may get diluted, because at the end of the day, statistically it appears that it will not have a material impact on both the sides, but the cost, whatever become, it will be borne by the US. And second thing, from Indian part per se, larger part of the impact will be seen on the textile side. One can say the industrial machinery side, but it will have some kind of multiplier impact on the other part of the GDP. So what we believe that at some point of a time this sanity will prevail, and both the party will come on the table for an amicable solution, because this kind of tariff rates are not prima facie appears to be practical.
Okay, so 70% will be applicable, 70% of the exports that we do will be subject to this tariff, that announcement that has come in. But Abhishek, tell us, how do you expect the market to react today, and are we expecting a bigger gap down opening today in trade?
See, taking cues from the gift Nifty, I don't think that it would be a substantial or a continuous negative reaction on the market. Yes, initially it may be some kind of a negative reaction, but the kind of position build up in the FNO market itself, it can say that you can take cues from the FNO market. So 92% of your shorting has already been happened. So if the substantial negative reaction would not come in the initial market, one can take a contra call, or one can take a contra view here, is that we may see some kind of a short covering in the market in the later part of the day, and I think that the market may remain in the consolidation phase. Market may remain in the consolidation phase not because of this event, but because of the ongoing events like this. Earnings are not giving any cues. FIs are continuously on the selling mode. I think FIs are selling the Indian market for last 12 to 13 days, and the fundamental structure or the valuation is not so cheap. So all these things will prevail, but I don't think that because of only this event the market will remain in the negative trajectory for a long period.
All right, so markets are likely to remain in the consolidation phase, but unlikely that it's going to be just because of tariffs. Thank you so much, Abhishek, for taking us through all those details and explaining what the additional tariffs mean for the Indian market. But on that note, we'll take a very short break. Be right back with more on the other side.
When the stakes are high and the answers are elusive, there's one voice unafraid to challenge the status quo.
At 8 p.m.
This is oil from Russia. Do you believe this is a negotiation tactic, especially because India has been given 21 additional days to negotiate further? How do you read this?
This is Donald Trump demonstrating two important things. One is he doesn't have an idea of what he's doing. He's clueless about this. He is his whole life, and I've covered him for almost 40 years, simply made things up as he goes along because he doesn't know anything. He's appallingly ignorant. Second, Donald Trump has no authority to impose tariffs. Under the American Constitution, and I teach this, taught at a law school for 15 years, Congress has the sole authority, with a very limited exception it's given to presidents, for short-term emergency tariffs to implement tariffs. And a tariff is a tax, ultimately a national sales tax on the consuming country, which would be the United States and the people of the United States. Donald, in the next 21 days, will no doubt flip-flop on this. He has flip-flopped constantly, given extensions, not acted, because there are no principles guiding Donald, and he doesn't know anything about economics.
Okay. Hi, David. This is Kanishka also joining in. You were just talking about U.S. consumers. So I just wanted to understand, you've previously written extensively on how tax policy policies actually create inequality. So in this, tariff war play with India getting 50%, tariffs, how do you see this playing out? Who will be the real winners and losers? And don't you think, if this high tariff is imposed, things are ultimately going to become expensive for the U.S. consumers, itself? Hi, David. This is Kanishka also joining in. I guess you couldn't hear me earlier. So I was asking, in this whole tariff play, with India getting 50% tariff, don't you think ultimately things are going to become expensive for U.S. consumers itself because, imported goods will be expensive? And also, you've written, extensively previously about how tax policies can create inequality. So how do you think this is going to play out? Who will be the real winners and losers here?
Well, the tariffs on India and other countries absolutely are raising prices in the United States. And Trump had said not would just stop inflation or control it, but he would lower prices. That's not what's happening. Prices are rising. But there's a second element to tariffs. When if the U.S. imposes tariffs on India and other countries, it allows competing domestic manufacturers here in the U.S. to raise their prices. Let me give you an example. Assume you make a car that you sell out the factory door wholesale for $10,000. You make $1,000. There's an Indian company like Tata Motors. It sells cars out the door for $10,000, but because of the tariff, it's now going to have to pay $15,000, charge $15,000 to cover the tariff. Well, you're not going to leave your price at $10,000. You're going to raise your price to $14,900, and your profit per car is going to go from $1,000 to almost $6,000. And even if you sell only half as many cars, you're still going to make essentially 3 times as much profit. So tariffs are a scheme to allow domestic manufacturers to artificially inflate prices. Donald doesn't know this. He has a degree in economics from Penn, an Ivy League school in America, but he almost never went to class. He only studied real estate, and one of his professors called him the dumbest student I ever had.
We'll talk about that in greater detail. Stay on with us, but we also now have Mr. Gaurav Sansanwal, Fellow Chair on India and Emerging Asia Economics, CSIS. Mr. Sansanwal, morning, and thanks so much for joining us today. We were just talking about inflation and the kind of impact it will have on American consumers. If you can tell us, what does this mean for the world economy? Higher inflation in the U.S., several exporting countries of India are also likely to be negatively impacted.
Tendencies are likely to obviously come in with the tariff uncertainty. There was a State Bank of India research a few days back which basically predicted about a 2% increase in US inflation, leading up to about $2,500 of extra expenditure that an average American household would need to incur to be able to make up for the rise in the prices of goods which the US is going to face, which is why I always say, given the tariff situation, while India may be feeling the heat, it is actually the US consumers who are likely to pay up the price for that, which is why the only way out of this is negotiation, and the two countries really need to sit across a table and negotiate, because otherwise this is really going to be inflationary given everything that's happening with the economic uncertainty around tariffs as well as the immigration pressures. All of these are extremely inflationary. So I completely agree with you.
Okay. Hi Gaurav, this is Kanishka also joining in. I actually wanted to ask you about Russian oil as well, because Trump says all of this is because India buys oil from Russia. Now, if at all India decides to stop buying oil from Russia, or at least limit the amount that it buys, which are the other partners you could think that India can identify and start buying oil from, because we import the majority of the oil for our own needs? Hi Gaurav, I hope I'm audible now. I just wanted to ask you what do you make of the whole Russian oil situation, because Trump did say that all of this high tariff on India is coming because it continues to buy oil from Russia, which is a problem according to him. So if India decides to move away from that and diversify its oil import sources, so where do you think, which are the other partners that India could look at?
Some audio issue. Mr. Sansalwal is not able to hear us, but Mr. Sansalwal and sir, thank you so much for taking your time out. David, for joining us and helping us understand what this means for the world economy. Thanks, gentlemen, for joining us with all those details. So that's how Indian market is positioned at the moment. But on that note, let's slip into a short break and we'll be right back on the other side.
When the stakes are high and the answers are elusive, there's one voice unafraid to challenge.
ASX 200 is also tepid in trade today, and Nifty implied open is suggesting a 60-point downtick for the Indian markets to trade near that 24,571 mark.
All right, so a slightly negative start is what we are penciling in for the Indian markets. But let's also get in Ravinder and Srishti to take us through the entire list of stocks that we need to keep on our radar today. Ravinder, let's start with you. Which are the stocks on your list?
Well, BHL can be focused on the back of their quarterly result, where company reported a Q1 FY26 number, and company reported a revenue at 5,487 crore as compared to 5,485 crore, which was flat by year-on-year basis, and company's net loss has increased to 456 crore as compared to a loss of 211 crore year-on-year basis. So overall, on back of a weak Q1 number, BHL can be in focus. Apart from this, keep an eye on RBL Bank, where bank has received RBI approval to acquire a holding in the Utkarsh Small Finance Bank Limited post amalgamation of Utkarsh Core Investor Limited and Utkarsh Small Finance Bank. As the bank hold 8.64% in UCL, and the shareholding in Utkarsh Small Finance Bank will exceed 5%. So back of this RBI approval, RBL Bank can be in focus. Apart from this, UPL can be in focus, where Moody's has revised its outlook from negative to stable, stating improved working capital management, expected deleveraging to 4.5 times by March 26, and EBITDA margin recovery to 18% over 2 to 3 years. So back of this, UPL can be in focus.
Stocks in focus across sectors, but Srishti, you tell us, which stocks are you picking up for us today?
Firstly, let's start with Bajaj Auto. The company did come out with a decent set, almost in line to what we were expecting at ET now. But along with that, in terms of the management commentary, they are highlighting that 125cc plus segment remains to be the key focus area for Bajaj Auto. The company managed to gain 3% market share in that particular category sequentially, and along with that, with respect to the export outlook, they have maintained their guidance of a growth that they are seeing at a 15 to 20% in the coming quarters as well. Along with that, in the domestic market, the management is optimistic the industry will grow at 5 to 6% in FY26, as well as the 125cc plus segment will grow at a faster rate. So that's the comment that we are getting from Bajaj Auto. For now, they are also saying that their production is getting impacted on the back of the rare earth magnet issue, and in the month of July itself, the production delivery was actually cut by 50%, and a similar cuts are expected in the coming month as well. But along with that, let's also put the spotlight on select shipping counters. They will be in focus as far Parliament passes 2 maritime bills in the shipping industry, so let's watch out for those counters. But in terms of the earnings, it's Hero MotoCorp as well did come out with a decent set, and especially the margins versus our expectation of 14%. 14.4% is what the company has reported, and along with that we have also seen that yes, the volumes have declined, but the margin performance was something that was quite impressive. Today during the market we will have the con call and we'll try to get more details from Hero MotoCorp. But and lastly, Trent, that will be the key counter to watch out for, as the company just come out with a good set rather, because there's been a beat on the profit, EBITDA as well as the margin front versus our expectation. But in terms of the commentary, the management reiterated its focus on the revenue growth across micro markets, but implying that the pressure on LFL may continue going ahead. So these are the stocks that are making to the list.
Host of other sectors, Srishti, will also be in focus on the back of the announcement that came in from Donald Trump yesterday. So textile sector, we have pharmaceutical, chemicals, machinery, gems and jewelry. All of these sectors will be in focus. Apart from that, 2 stocks in focus on the back of block deals that are expected to happen today. One is Eternal or Zomato, where Antfin Group is looking to sell its stake in the company, nearly about 1.95% stake, which translates to 5,400 crores. And remember, this will be done at a floor price of 285 rupees per share. Kotak Mahindra Bank on the same news peg, where one shareholder is looking to sell nearly 0.5% stake in the company. This translates to 2,066 crore. And the floor price at 1955 will be at a 2.5% discount as compared to yesterday's closing price.
All right, so those are all the stocks that we are tracking this morning in today's trading session. Thank you so much, Ravinder and Srishti, for taking us through that list. But Srishti, stay on with us. You were just talking about Bajaj Auto, right? It was an inline quarter for the company, with EVs doing most of the heavy lifting for the company. Now, it does expect rare earth issue to persist, but more hopeful from the 125cc bike segment, right? So what is the management making of it? What did you hear in the con call? And what are brokerages making of the results there?
Well, in terms of the con call, the management is hopeful that the domestic industry will grow at a 5 to 6% rate, and is the 125cc plus segment that will grow at a faster rate. In terms of the export, they continue to maintain their double-digit growth outlook over there. But yes, on the rare earth magnet issue, they're saying that the production got impacted by almost 50% in the month of July, and a similar cut is expected in the month of August, though the situation is expected to be a little better in the current month versus the previous one. But in terms of the brokerages, they have actually gone ahead and cut their target price marginally, in case in point being Aventus, because though they maintain their buy rating on this counter, but they have cut their target price from 9,700 rupees earlier to 93.50 now. The overall basis, they are penciling in a CAGR growth of 5% through FY25 and 27 in the domestic volumes. In the export, they are baking in an overall volume growth of 12% between the same period. They anticipate the overall margins to come in at 20% by FY27 as well, which is very close to the current market levels. And over in the medium term, Bajaj Auto is set to scale its EV presence as it's widened the electric two-wheeler as well as the three-wheeler range going forward, and they value Bajaj Auto on FY27 EPS estimates at 25.5 times. So on the back of these brokerage notes and management commentary, all eyes on Bajaj Auto.
But apart from Bajaj Auto, Hero MotoCorp will also be in focus because it reported its first quarter earnings, where revenue has come in below street estimates, but we have PAT and margins which have seen a marginal uptick this quarter. Tell us more about Hero MotoCorp.
Well, yes, Hero MotoCorp did come out with a decent set rather. Yes, the revenue has come in a little lower than what we were expecting at ET now, but the margin performance was quite resilient versus our expectation of 14%. The company clocked in a margin of 14.4% this time around. And the management commentary regarding the growth outlook going ahead remains to be the key positive. But yes, along with the fact, they are also highlighting that how the company has been gaining the market share in the EV segment specifically, because Hero Vida has actually managed to gain a double-digit market share in the last month's sprint. And going forward, yes, all eyes will be on the management commentary in the con call, which will happen during the market hours. But for now, Hero MotoCorp almost an inline set, but the margin performance was a bit impressive. But the key to note is that the stock has already seen a good run up in the last 2 to 3 days.
All right, so all eyes on the management commentary later today from Hero MotoCorp. Thank you, Srishti, for taking us through all those details. But with that, we're completely timed out on this edition of Market Cafe. Ashesha and I will take your leave, but stay tuned as the market will take all the action forward.
When the stakes are high and the answers are elusive,